6 ideas from Naval Ravikant that are going to change your investing. Most people treat investing like a spreadsheet, but truly great investors treat it like a philosophy. And few have a clearer philosophy on life and wealth than Naval Ravikant. I'm Mehdi from Contrarian, and today we are going to deep dive into 6 core concepts from Naval Ravikant that are going to make you a more patient, wiser, and better investor, and I hope help you reach your financial goals. So let's get started. But before we dive in, who is Naval Ravikant and why it matters? So Naval Ravikant is actually first and foremost an angel investor, and this is why he has become famous. So he's a co-founder of Angel List, and he has been an investor in companies like Uber, Twitter, or Notion. And actually, he kind of changed the way startups are being funded, especially at the angel level. And that's why I think that he actually get a great name into the game. But what really actually makes sense for us today and why we are talking about Naval Ravikant today is because he has evolved into kind of angel philosopher where he really distilled a lot of philosophy about wealth, about life, about investing through different medium. And I think he's actually a great philosopher today, and he will really help a lot of people with first principles and mental models to help people have a better understanding of what they are doing and how they can become better in life. The reason why it's actually very relevant for investors like you and me is that with this first principle, it really gives you like the mental models to approach investing in very different situations, but also to understand the world where we are investing in. And actually, everything that he has been working on has actually contributed a lot to the way that I'm thinking about investing. And I think that the way you should be able to think about investing and build the habit and the understanding of the world. And so definitely applying this philosophy to your investing game is really going to improve the way you invest and really going to help you get where you want to go. You are not going to get rich renting out your time. You must own equity. So we have seen in a previous video that in the age of AI, you must invest. You must actually practice investing, meaning being a part of this new capitalistic system that is actually proposed by AI into a new dimension. And so I think that it's fine being an employee. So a lot of people, when they hear that quote, they understand that you must be a business owner, you must be an entrepreneur. But by owning equity, it just doesn't mean just being a business owner. It means owning a piece of a business. And that's what we are doing when we invest and when we buy stocks. And so that's very important for you as an individual to actually own pieces of businesses, because this is how you own pieces of the economy, and this is how you benefit from the whole system actually evolving into this type of growth way. And so what we can apply that to or what we can apply to our investing here is that you should invest. That's the first principle. You should invest. If you're an employee, you should invest your money because you will benefit and you will actually be wealthier, definitely, if you invest in the best companies in the world. So over time, they're going to grow and you're going to grow with them. And so that's, I think, the first principle of investing. Beyond trying to pick stocks, beyond trying to find the hot picks, I think that the core principle is that by investing, you are benefiting from the whole growth of the economy. But then you will tell me why I must invest and why I cannot just work. Well, the main concept that Naval is actually bringing here, and a lot of people have already said that before, is that by working, basically your input is tied to your output. And so, which means that you can work more if you want, but it will be very difficult to actually achieve the same results that the capital is actually delivering today. So it's very difficult to have like raise at work, for example, but it's also very difficult to actually compound just by having a salary. The next quote from Naval Ravikant that I really like and that really applies to your investing is, judgment is the decisive skill in an age of infinite leverage. And you can complete that or replace infinite leverage by an AI world. And so definitely judgment is the key. And I think this is one of the most important concepts from Naval Ravikant, because in investing, everything is based on judgment, because all the figures are usually available to all investors. And the success in investing is going to rely heavily on your judgment, on your ability to understand the facts your ability to basically build thesis and judge what should happen in the future. So as an investor, your job is to see the future, to have better judgment than others, meaning that when there are opportunities, your judgment tells you that you should get into these opportunities, and when they are trapped, your judgment should tell you to avoid these ones. And so that's why in an age where capital is very important, so judgment is going to make the whole difference. Also, you have to remember that actually, based from this quote, the idea is that internet was a huge leverage, being able to let you reach a lot of people at scale. And so now you have AI, which is going also to have infinite leverage to let you compute a lot of data. But what remains to you and the real unfair advantage that you might have is better judgment, because everybody can actually have a lot of information, reach a lot of people, and actually crunch a lot of different analysis based on available public information. But analyzing and crunching the numbers does not mean having better judgment or making better decisions. So this really is a trait of great investors, to make great decisions. What you must remember as well is that great judgment comes from experience, comes from repetition, from different patterns that you have seen in the past, and all the studies and all the research you have done in the past. So judgment is just some natural skills that some have and some don't. This is something that is built with experience and with investing along the years. So this is something that I think a lot of people are going to get, but if you don't have the proper mental model, if you don't have the proper framework, and if you don't put the work, it will be difficult to have great judgment even after years of investing. And finally, on this idea of judgment, why it's so much important to have good judgment is because good judgment and great decisions, they compound. So that's how you become wealthy, that's how you become rich, by a succession of great decisions. And by great decisions, we can mean like making a lot of money in one stock, but we can also mean like not losing money at all. So that's a great decision and that's great judgment. Avoid pitfalls and find opportunities. That's where you're going to win. And that's with great judgment. And with judgment and AI and the internet, you will be able to get to your financial goal. So we've seen that judgment is one of the core principles that Naval Ravikant is actually preaching, and that is the most important thing in investing. But then, this is not just about judgment, because the next quote by Naval Ravikant is that the best investing attitude is contrarian, patient, and informed optimism, not consensus and right. Yes, because even if you have great judgment, if everybody agrees with you and that everything is already reflected in the price of the security you want to buy, you're not going to make much money. So that's why you have to have great judgment when others don't. And so the best opportunity and the massive upside can be found in situations where there is a lot of pessimism and there is a lot of things that are discounted into the stock price. So we have seen that already with the video on the setup, for example, or the video on United Health. And the point is that all these situations where there is a huge conflict of opinions between investors, these are opportunities where you have to have a contrarian attitude. But being a contrarian does not mean that you should buy the dip every time. You have to know which dip to buy. You have to know which are opportunities and which are traps. So that's what makes you a great investor, and that's where judgment comes into play. So there are two factors here: it's great judgment, but also having a contrarian, meaning going against the crowd. So you have to be right against the crowd, because this is how you're going to make the most money, not by just being consensus and right. If you do that, that most likely you will get average return or maybe below average return, because sometimes the consensus is not right, and then you're going to be wrong with the consensus. So once again, so the best investing attitude is contrarian, patient, and informed optimism. So the second part of this is patience. Yes, patience, because if you're a contrarian, your thesis is not going to play out in 1 or 2 days. It will take time to develop. It will take time for people to realize that they were wrong. It will take time for also different factors to actually play out and change. So that's why you need to be patient. You need to let your thesis play out and actually wait that all these factors are going to show the world that you were right at the beginning. Because if you don't wait and if you don't play the long-term game, it will be very difficult to make significant money. Because if you enter as a contrarian, it means that at the beginning you were wrong because you are against the crowd. So if you want to be right and if you want to massive upside, then you need to be patient. All the returns in life, meaning wealth, relationship, and knowledge, comes from compound interest. That's a profound quote that actually continues what we've seen previously, and that actually shows you that you need to be patient and you need to have compounding into everything that you're doing. So that's the same for YouTube, for example, because the more people watch these videos, the more YouTube is going to recommend videos to others. So this is going to compound over time. So the more video I make, the more people are going to watch my videos, and the more I will be able to make more videos. And so that's the same for your money. The more you are able to invest today and the more your money is going to grow tomorrow, because more money is going to make even more money. So that's the point of compound interest. And this is true as well for knowledge, because the more knowledge you acquire today, the more knowledge you will be able to seek tomorrow. And you will always have like a higher base. So if you improve 1% every single day, after like 1 year, you will be much ahead of a lot of people with just tiny increments. So the point here is that compound is the eighth wonder of the world, and it applies to everything. And for your investing, it applies not only to your money, but also to your knowledge of investing. So it means mental models like this video, but it also means by studying what happened in the past. Because the more you know what happened in the past, the more you start recognizing patterns. And this is what we call experience. So with experience, you will be able to understand better what is happening today in the market, and you will be able to apply the lessons from the past. And by studying over time, you understand more and more. And this is where the compounding from knowledge is coming from. So what Naval is saying that you have to always try to compound, because if you just repeat what you're doing without any compounding, you're just wasting time. And this is the same for your money. So if you cannot compound your money, if you cannot find opportunities that compound themselves over time, then you will never grow anything. Following the quote on compound interest in life, wealth, relationship, and knowledge, what applies also to you investing is this famous quote: play long-term game with long-term people. Yes, the first part of the quote is very important in investing. You have to play long-term game. Don't try to be short-term. Don't be like a day trader. You have to actually see the future, and you have to try to play the long-term game, meaning that things are going to play out, but on the long term, things are playing out much slower than what you can actually anticipate. I think this is a bias that a lot of people have, that everything has to happen in the next 6 months. But the reality of the business and the reality of life is that things takes time to develop. And so same as for your thesis, like you have to wait, you have to be patient. And so this is how you have to play long-term games. So in investing, how it translates, it means that you have to find companies that play long-term games as well. So companies like Amazon, companies like Brookfield, that invest today to actually grow tomorrow. Because if you just try to find companies that are going to have like some kind of V-shaped recovery or with a very quick gain, it's going to be very difficult to replicate on a consistent basis. So if you want to have a consistent investing and grow your portfolio over time, you have to have, at some extent, those type of companies that grow time after time. So like the hyperscalers are a good example, but you have a lot of companies like that invest today to grow tomorrow. That's very important. And with that, you need to play long-term games with long-term people. So it means that you have to find companies with great management who also play these long-term games with you. So you have to find management that is incentivized to do that. And so that's what we can see with Brookfield Corporation and Blues Flat and all the management who are incentivized to actually make the business grow over time, to compound over all the investment that they are making. And so this is very important, because if you have a management which is actually short-term, meaning that they're going to leave in 1 or 2 years, they are going to be incentivized not to actually deliver results for you as a shareholder, but just to enrich themselves with the very short time that they are within the company. The last quote from Naval Ravikant that I think is very important and applies very well to investing is embrace accountability and take business risks under your own name. I think that this is one of the most difficult things about investing, especially if you are doing investing by yourself, meaning you are stock picking, not just investing into index funds. Because selecting securities by yourself means that you have to take accountability for your actions, meaning that you make the decisions, you apply the judgment that we've discussed before, and based on that, you will get the results. And I think that this is very difficult because in our world, it's very rare for people to actually have real accountability and have action that have direct output from their own judgment. And so I think it's very hard for people to actually deal with that because it's something which is hard to actually embrace the fact that you are going to make a mistake, you are going to lose money, and you have to accept that. You have to accept that you can make mistakes, that you can make errors of judgment, and you will grow with time. You will accept it, but you have to be at peace with those type of things. This also means that you have to think independently because all the decisions, they are your own. So you cannot follow blindly people you see on YouTube, people you see on X, or people you see everywhere, like market gurus, because first of all, like you are not in their positions. What I also want you to realize is that you cannot just copy paste what others are doing because you are not in their position, as I said, but also that a lot of things are not clearly said, like on YouTube or on Twitter. Like, for example, people, they can tell you that they invested in this stocks or this other stock, but they don't invest a meaningful amount. And so you think that they are actually invested in the stock when, like, it doesn't matter to them. And also, like, there is a timing issue, a timing proposition that you have to deal with, meaning that people are going to tell you when they get in, but they're not going to tell you when they get out. And so, as an investor, you will have to take the responsibility if there is a loss or if, like, things are not going well. And so you cannot follow blindly this type of people or anyone on the internet. So you have to make your own decisions because you're a grown person and you have to do your own decisions. So you have it, 6 quotes from Naval Ravikant that are going to radically change your investing and really help you to get to the next level in terms of investing and really help you, I think, on the long term, being a better, wiser, and more patient global investor. So we've seen that you cannot get rich renting out your time, you must own equity. We've seen that judgment is the decisive key in this AI era. We've seen as well that you should play long-term games with long-term people. We've seen that the best investing attitude is contrarian, patient, and informed optimism, not consensus or right. We've seen that everything and all the return in lives come from compounding interest, either in knowledge, either in relationship or wealth. And lastly, embrace accountability and take business risk under your own name. So with this 6 core concept that you should include into your investing game, you will definitely be a much better investor and be able to approach all the different situations that you will see as an investor in a much better way. So as we've seen, investing is just not numbers and spreadsheets, it's also part of a philosophy. And so if you're interested in other investing wisdom or the analysis like this one, please check my other videos. Please subscribe and I see you in another one. Bye.